Hello everyone, welcome back to another video. If you're new to this channel, my name is Farhan and I help accounting students like you ace their exams. Today we have got a practice question for the topic trade receivables. In this question, you will learn to prepare all the necessary journal entries and account for the allowance for impairment of trade receivables for two different financial years ending 30 September 2016 and 30 September 2017. You will also understand how the prudence accounting theory requires us to make the allowance for impairment of trade receivables. You can see the question on the left hand side of your screen, and on the right hand side we have got all the workings which I'll go through and explain to you step by step. What I need you to do now is focus for an excellent understanding. With that being said, let's begin. Ocean Fresh Trading is a sole proprietorship business that supplies seafood to restaurants. At the end of each accounting year, on 30 September, the business reviews its trade receivables to identify those which are unlikely to be collectible. So here you can see we are given a list of various customers which we have got in our business, and we have been also given the balances owed by these customers at three different points in time, which is at the end of 30 September 2015, then at the end of 30 September 2016, and at the end of 30 September 2017. Now let's read through the paragraphs that are given here. On 1 March 2016, Yum Yum served notice for bankruptcy. It could only pay 20 cents for every dollar owed. The business received a check for this amount and the remainder amount was written off. On 1 December 2016, Fabulous Foods was declared insolvent. The amount that it owed was confirmed as irrecoverable, which means these guys, they're not going to pay us anymore and we have to write this off. Now, the requirement in Part A is to prepare all the necessary journal entries and account for the allowance for impairment of trade receivables for the years ended 30 September 2016 and 30 September 2017, and then explain using an accounting theory to justify why we should make an allowance for impairment of trade receivables. All right. Now, if I can have your attention to the right-hand side where we have got all the workings. So let's see how we can solve this. So we understand the first financial period that we're given here just recently ended at 30 September 2015, right? And at that point in time, we had two customers who owed us money, who are Yum Yum and Delicious Delights, okay? Now, what we want to do is first look into the 12 months starting 1 October 2015 and 30 September 2016 when it ends. And we want to calculate the amount we received from Yum Yum based on the first paragraph which is given to us, that on 1 March 2016, Yum Yum paid us 20 cents for every dollar owed. Okay, so what does that mean? That means we're receiving 20% of $6,500 that Yum Yum originally owed us, which means the amount we expect to receive from Yum Yum is $1,300. Okay, now when you receive this money from Yum Yum, how should we correctly journalize it at 1 March 2016? We debit the cash at bank account by $1,300 because our funds available in our bank account are going up when we receive the money from Yum Yum, and cash at bank account is an asset account, which means we have to debit it when it increases. Simultaneously, we have to reduce the balance owed by Yum Yum, and how we can achieve that, we credit the asset account, specifically the current asset account, trade receivable Yum Yum, by $1,300. So when we credit this asset account for Yum Yum, we are actually saying that Yum Yum owes us $1,300 less because he has already paid us $1,300. So this is the first set of journal entry at 1 March 2016, which is valid for the financial year ending 30 September 2016. Okay, so the first two lines of journal entry to record the cash that we have received in our bank account, which increases our bank balance. Therefore, we debit the cash at bank account, and also simultaneously, Yum Yum owes us less money. Therefore, we credit the account for Yum Yum, specifically trade receivable Yum Yum. Okay, now what we want to do next is also do the allowance for impairment of trade receivables. Now, Previously, at the end of 30 September 2015, which is at the end of the first financial year as given in the question, based on the preceding facts, which mentioned that these customers are unlikely to pay, what we would have done at 30 September 2015 is to record an allowance for impairment of trade receivables, right? So what do we understand by that? So at 30 September 2015, when we prepare our books, as part of our journal entries, we would be recording the fact that two of the customers, which is Yum Yum and Delicious Delights, owed us $6,500 plus $8,700, altogether a total of $15,200. And because we were not sure if we could recover this amount, we prepare an allowance for impairment of trade receivables at 30 September 2015. An allowance for impairment of trade receivables account is a contra asset account, which means it records all the reduction relevant to an asset account, and the asset account in this case is the trade receivables account. So contra asset accounts by default are always credited in nature because it records all the reduction. So if assets are debited in general, then contra asset accounts which records all the reduction for assets would therefore must be credited when it increases. So therefore at 30 September 2015, we would credit the allowance for impairment on trade receivables account by $15,200, which is the total of the amount owed by Yum Yum, that is $6,500, and then $8,700 owed by Delicious Delights, altogether which is $15,200. Simultaneously, at 30 September 2015, which is the end of the previous financial year, we would be debiting impairment loss on trade receivables by $15,200 because obviously we have an expense in the business and we don't want to overstate our profits. So as part of our other expenses, we would be showing an impairment loss on trade receivables of $15,200. All right. So as we have already established that previously we had an allowance for impairment of trade receivables account, which we would have created at 30 September 2015. What does that mean for this financial year ending 30 September 2016, where we have got fabulous foods and fish, new customers and everything? So at 30 September 2016, first, we want to make sure that the allowance for impairment of trade receivables is reduced by $5,200 to confirm that Yum Yum is unable to pay that. So we understand allowance is like a precautionary measure, that account which we would have created. We would have kept aside $15,200 as amounts which are likely to be not collected. And now that in this financial year at 1 March 2016, Yum Yum has confirmed it, we can now confidently reduce this allowance to reflect that Yum Yum is unable to pay. So we debit the allowance for impairment on trade receivables account by $5,200, and simultaneously again, we have to credit the trade receivable account by Yum Yum, obviously because these guys can't pay us anymore and they're no longer our assets, and when assets go down, we must credit them. So we would credit the trade receivable account, specifically the account for Yum Yum, by $5,200. So on 1 March 2016, we actually have two sets of journal entries, as you can see. The first to record the amount received, and the second one to offset any remainder amounts that are owed by Yum Yum and has been confirmed by Yum Yum that he can't pay anymore. All right. So for the year ended 30 September 2016, these are the 4 lines of entries which are mainly required. But obviously, to get a full mark, you need to understand what's been happening since the first financial year at 30 September 2015. So that is the trick or the complication involved in this question. All right. So now there is something else, because we understand we have got 2 new customers at 30 September 2016 who are Fabulous Foods, and they owed us $4,600, and then we have got Fish who owed us $7,800. Okay, so that means at 30 September 2016 we calculate the total allowance for impairment on trade receivables to be the total of $4,600 and $7,800, which would be $12,400. Now, I need you to recall some information. So at 30 September 2015, the total allowance for impairment on trade receivables was $15,200, which would have been the total added for Yum Yum and Delicious Delights, right? And then along the way, on 1 March 2016, this allowance was reduced by $5,200 to reflect the reduction when Yum Yum confirmed the bankruptcy. All right, so the $5,200 that they can't pay us. That would have left us with a balance of $10,000 for the allowance for impairment of trade receivables that is already stored in that account, all right, to be offset in the future for any uncollectibles. And at 30 September 2016, based on the amounts owed by the two new customers, Fabulous Foods and Fish, we now understand that the allowance for impairment of trade receivables is now $12,400, which means we have to increase it from $10,000 to $12,400. That means we need to increase it by $2,400, right? So that means at 30 September 2016, we have an increase in allowance for impairment of trade receivables. What I need you to remember is that whenever there is an increase in allowance for impairment of trade receivables, an expense must be incurred. And that expense is the impairment loss on trade receivables, and all expenses, whenever they're incurred, by default in nature, we have to debit it. So we debit the impairment loss on trade receivables, $2,400 at 30 September 2016. And simultaneously, we credit the allowance for impairment loss on trade receivables, which has increased in value by $2,400. And therefore, that is what we have done here. So for the financial year ending 30 September 2016, we actually have 6 lines of journal entry. So we have got 2 lines here that we have just done. And then previously, we had 4 lines here, all right, for all the information that we had to record for Yum Yum. All right, so that's how you get exactly full marks. Now let's move to the next financial year. Okay, so the next financial year, which ends on 30 September 2017, will definitely start on 1 October 2016. And the first entry is on 1 December 2016 when Fabulous Foods declared themselves to be insolvent. That means we cannot get any amount that these guys owe us. So Fabulous Foods owed us $4,600, which is 100% confirmation that they can't pay any of it. So once that has been done, that means that we now need to reduce the allowance which we have originally created. If you recall, the balance we had at 30 September 2016 was $12,400. Now it is going to go down by $4,600 because Fabulous Foods have confirmed that they can't pay. So we can now offset this through that contra asset account. And because the allowance is now going to go down, we debit the allowance for impairment of trade receivables by $4,600, and simultaneously the entire trade receivables account for Fabulous Foods, who are our assets originally, will now be credited because they are reducing in value. So we credit the trade receivable account for Fabulous Foods by $4,600. All right, so after we have done that, the balance that should be left since the previous year ending 30 September 2016 is $12,400 minus $4,600, which is $7,800. And we understand at 30 September 2017 that we have another customer, All Shell, who owed us $8,000, and we expect to not collect this. So what's happening is that our allowance now have to be increased by $200 from $7,800 to $8,000. Again, whenever there is an increase in allowance for impairment loss on trade receivables and expenses incurred, which is known as the impairment loss on trade receivables. So the correct way to journalize this at the end of the financial year on 30 September 2017 would be to debit the expense account, which is the impairment loss on trade receivables account, by $200, and simultaneously we increase our contra asset account, which is the allowance for impairment loss on trade receivables account, by $200. Okay? All right, so for the year ended 30 September 2017, these are the only 2 lines of entries. And for you to get full marks here, you need to make sure your numbers are perfect. So the $200 is the correct amount that you need to show here, okay? All right, so part B requires us to use an accounting theory. So we have already established an allowance for impairment loss on trade receivables to be a contra asset account because it records all the reduction that takes place in a relevant asset account, and the relevant asset account in this case is the trade receivables account, okay? Now, the prudence theory states that assets must not be overstated and expenses must not be understated. So when we say assets are not to be overstated, we want to show the net trade receivables in the balance sheet or the statement of financial performance. And the net trade receivables is calculated as the difference between the gross amount and the allowance for impairment loss on trade receivables. So as you can see, we are not overstating our assets. We are also factoring in all the unlikely amounts that we may not collect, okay? And when you look into expenses, we are not understating it, because whenever we record any kind of allowance or increase our allowance for impairment loss on trade receivables, and expenses incur, and we must make sure that expenses are not understated, and therefore we record that impairment loss on trade receivables in our other expense as part of a statement of financial performance, which is the income statement, okay? All right, so that's all for today's lesson. If you found value in this content, make sure to drop a like and subscribe to this channel, and check out all the other videos that I've uploaded in this channel for many topics such as financial statements, correction of errors, etc. You can also check the links in the description if you are a POA 7087 or a POA 7086 students for the intensive programs which we are running in the first 5 months of Jan, so that you can be better prepared for your exam at the end of the year. With that being said, I'll conclude today's lesson, and I'll see you in the next one.